Hi, I'm Mike Malachi, a CPA with Pink Harbor CPA. If you're a senior and you like to give to charity at the end of the year, there are a few ways to do it that can save you a lot in taxes. And some of them are completely tax-free if you do them before December 31st. I'm going to cover 3 strategies in plain English: donating appreciated property, qualified charitable distributions from your IRA, and a special above-the-line charitable deduction for people who don't itemize. And why we're giving in 2025 can give you a bigger tax benefit than waiting until 2026. Before we dive in, if you like clear, no-nonsense tax tips for seniors, please hit like and subscribe. And in the comments, tell me your favorite charity. I love seeing where people are giving. Let's start with donating appreciated property. If you've owned stock, mutual funds, or even a piece of real estate for more than a year, and it's going up in value, that gain is normally taxed when you sell it. For example, you bought a stock years ago for $5,000. Today, it's worth $20,000. If you sell it and then give the $20,000 to your favorite charity, you may owe tax on that $15,000 of gain. But there's another option. You can donate the stock itself, the shares, directly to the qualified charity. When you do that, you avoid paying capital gains tax on the $15,000 increase. And if you itemize deductions, you can usually deduct the full fair market value, the $20,000, on your tax return, subject to some limits. So in many cases, donating appreciated stock is better than selling it and then giving the cash. The charity gets the same amount, but you avoid that capital gains tax. Quick reminder, this works best when you've held the investment for more than a year and you're giving to a real charity, not a private individual. If that's helpful, tap like and share this with a friend or family member who's also retired and gives to charity. And let me know in the comments if you've ever donated to stock instead of cash. Next, let's talk about one of the most powerful tools for seniors, the Qualified Charitable Distribution, or QCD. If you're age 70.5 or older, you can give money directly from your IRA to a charity. The key is it goes straight from the IRA to the charity. It does not pass through your personal checking account. Why this is so important? Because that distribution never shows up as taxable income on your tax return. It is completely excluded. And if you're already taking required minimum distributions, RMDs, that QCD can count towards your RMD for the tax year. So you can satisfy your RMD and give to charity at the same time without increasing your taxable income. There is a limit each year on how much you can send this way, but for many seniors, even using this for part of their giving can lower their tax bill, help keep Medicare premiums lower, and reduce how much of their Social Security is taxed because their income number is lower. The big rule, the transfer has to be completed by December 31st to count for this year. If you're learning something new here, hit subscribe and hit that notification bell. And tell me in the comments, have you ever used a QCD or is the first time you're hearing about it? Now, the third topic, the above-the-line charitable deduction for people who don't itemize. There is a special rule that may let some people take up to a $1,000 charitable deduction above the line, even if they don't take the standard deduction. 2 very important points. First, to qualify, this has to be a cash contribution. That means things like check, cash, or a credit card payment to a qualifying charity. Donating goods like clothes, furniture, or household items to places like Goodwill does not count for the $1,000 above the line deduction. It has to be cash. Second, timing matters. The way the rules are currently set up, the charitable deduction percentage is being reduced by 0.5% in 2026. What that means in plain English is, for the same dollar of giving, you can generally get a slightly bigger tax benefit by giving in 2025 than waiting until 2026. So if you're already planning to give, it can make more sense to do more of that giving in 2025 rather than putting it off until 2026. because the deduction is a bit more favorable in 2025. Let me quickly recap the year-end planning. First, if you have investments that went up a lot in value, consider donating some of those shares directly instead of selling them first. Second, if you're 70 and a half or older and give to charity, talk to your IRA company about making a qualified charitable distribution before December 31st. Third, if you're looking at the $1,000 above the line deduction, remember it must be cash, not donated items. And giving in 2025 can give you a slightly bigger deduction than waiting until 2026 because of that 0.5% reduction. If this feels overwhelming, you don't have to figure this out alone. At Pink Harbor CPA, we prepare tax returns virtually for clients anywhere in the country. You can have your taxes done from the comfort of your home, no office visit required. You can call us at 856-226-9524 or schedule online using the link in the show notes below. Again, my name is Mike Malache, CPA, at Pink Harbor CPA. Thanks for watching, and I hope you have a generous and tax-smart end of your year.